Hey guys, this is the Forex Price Action Trading Course Part 2. This is lesson number 8, confirming biases with trend lines. Now firstly, we'll be going over the basic paradigm. Now in this section, I'm going to explain the general idea behind confirming biases using trend lines. And then we'll go on to how to draw trend lines for confirmations. Now this is a very important section because the methodology to draw trend lines for confirmations is not the same as regular trend lines we learned in part 1 of this course. Okay, and then we're going to go on to defining a legitimate breakout, where I'll explain the details that you should be looking for when judging whether or not a trendline breakout is legitimate or not. And then finally, we'll go over a demonstration of how I confirmed a bias using trend lines on a recent trade I was analyzing. Okay, so let's get going, guys. Okay, so the basic paradigm. Now, in order to confirm a bias, we'll be using trendline breakouts, then immediate breaks back in to measure lower time frame strength in a given direction, and thus confirm a higher time frame's bias. Okay, let me just explain this one. Alright, so let me just draw upward trend line right here. Now here's the basic idea of trendline breakout confirmations. So if price started from this area right here, wiggled around and came all the way down to this upward trend line, broke it out, then immediately broke back in. Now by immediate, I mean the breakout candles close right here, and the break back ins open right here is roughly at the same price level. Okay, now if this situation occurs, that would show normal long strength. Alright, so let's look at it from the opposing direction. So if there was a downward trend line like so, and price was wiggling around here and came up to this downward trend line, broke it out, then immediately broke back in. Well, that will signal normal short strength. Okay, so this is the basic skeleton of this type of lower time frame confirmation. Alright, let's go on to number 2. Okay, so in order to use trendline breakout confirmations, we'll be using every other lower time frame under the time frame that the bias was measured on. Okay, so if you watch my forecast and analysis, I typically post daily biases and weekly biases. However, keep in mind, it really can be any time frame's bias. So it could be a 1-year bias or a 3-year bias. But in this case, we'll be using the daily bias and weekly biases for this example. Okay, so let's say we found a daily short bias. Now in that case, we're going to look on every other lower time frame under the daily chart all the way down to the 1-minute chart to find trendline breakout confirmations to confirm this daily short bias. Okay, so that will mean you will be using the 4-hour chart, 1-hour chart, 15-minute chart, 5-minute chart, and 1-minute chart to confirm this daily short bias. Okay, and moreover, if we had a weekly long bias, let's say, again, we'll be using every other lower time frame all the way down to the 1-minute chart to confirm this weekly long bias with trendline breakouts. Now in this case, we'll be using the daily chart, 4-hour chart, 1-hour chart, 15-minute chart, 5 and 1-minute charts. Alright, so let's go on to number 3. Alright, number 3. The higher the time frame of the trendline confirmation, the stronger it is. Alright. Okay, so let's say we had an upward trend line on the 5-minute chart. And price wiggled around and came down to this trend line, broke it out, and immediately broke back in. Now that was signal 5-minute normal long strength. Okay, and moreover, at the same time, let's say there was a 15-minute downward trend line like so, in which price wiggled around, broke it out to the upside, and immediately broke back in, which signaled 15-minute normal short strength. Now, these two confirmations were the only confirmations that formed on a given pair. That pair will have more short strength, simply for the fact that this normal short strength was on the 15-minute chart, which is a higher time frame than a 5-minute chart. Okay, so the higher the time frame that the trend line confirmation formed on, the stronger it is. Okay. Alright, and now there's two basic degrees of strength, normal and strong. Okay, so let me show you how to get this strong strength. Okay, so let's say we had an upward trend line like so. Price wiggled around, came down to it, broke it out, and immediately broke back in, thus creating normal, long strength. However, let's say that price went up just a little with that normal long strength, but came right back down to the price level in which that normal long strength was created, right at this pivot right here. Now, the moment that price reaches that price level, strong short strength is created. Okay, so let's look at it from the opposing direction. So let's say we had a downward trend line and price came up to it like so and broke it out and immediately broke back in. Now at this point, there's normal short strength created. However, price wiggles around and comes right back up to that price level where that normal short strength was created. Right when that price level is reached, there is strong long strength created. Now, the way to remember this relationship is to think that although normal short strength was created with this break back in, even stronger long strength was able to override that normal short strength and bring it right back up to where that normal short strength was created. Thus, since price was able to bring price right back up and override that normal short strength, it could be assumed that there's even stronger long strength in this market. Okay, so let's keep going. All right, the underlying themes in confirming biases. Number one, we want strength in the direction that we want price to go. And number two, we want stronger degrees of strength in the direction of the bias. Okay. All right, so let's say we had a bias on the higher time frames. So we have two price levels like so. And let's say it's a daily short bias, which is stating that price is likely to reach this pivot low before reaching this pivot high. And thus the main stop loss level will be up here, while the main target will be right here. Now, number one states that we want trend line confirmation of strength in the direction that we want price to go. So let's say price was wiggling around here and comes down toward the target. At this point right here, we want price to go up, right? So we can minimize our risk and take a short entry along with this daily short bias, correct? So let's say we got a 5-minute strong long confirmation through trend line breakouts. All right, so since that signals lower time frame long strength, price bursts up all the way up to these levels, wiggles around and comes here. Now at this point right here, let's say we further got 15-minute normal long strength through trend line confirmation. Now that's good again because we still want price to come up close to that stop loss level so we could take a short entry, right? And so let's say that 15-minute strength brought price all the way up to these levels. Now these levels right here, now we want price to go down toward our target. So let's say we took an entry right here with the stop loss at the main stop loss level right here. And so let's say we got 1 hour strong short strength through trend line confirmation. and price gets pushed all the way down to these levels right here. And still at this point right here, we still want price to go down, correct, toward our target. And so let's say we got 15-minute normal short strength confirmed, and price goes all the way down to its target. Okay, so one underlying theme in terms of confirming biases is that we want to see lower time frame confirmation in the direction that we want price to go. So in other words, as price reached these levels close to our stop loss level, let's say we actually got a 1 hour strong long strength confirmation through trendline breakouts. Now at that point, since the lower time frames are not confirming strength in the direction we want price to go, you should begin to doubt the legitimacy of this daily short bias and not take this short entry, and moreover perhaps even changing your daily bias from short into long and taking a long entry along with this 1 hour strong long strength, with this main target being at this main stop loss level right here. For if the bias was actually long, the stop loss and target levels will interchange, to the target being up here and the main stop loss being right here. Okay, and the second thing we want to see in terms of confirming biases on the lower time frames is that we want to see higher degrees of strength in the direction of the higher time frames bias. Okay, so let's just visualize that. Okay, so again, we have two price levels like so. And let's say again the daily bias was short, so the main stop loss level was right here and the main target was right here. So as price came down to these levels right here, let's say we got 5-minute normal long strength through trendline breakouts, and thus pushing price up to these levels right here, or let's say we actually got a 5-minute strong long strength confirmed, further pushing price all the way up to these levels. And since our risk was minimized, let's say we took a short entry along with this daily short bias, and then moreover soon after at this point right here, let's say we got 15-minute strong short strength confirmed. Now this 15-minute strong short strength is something we want in terms of confirming biases, because we constantly want higher degrees of strength in the direction of the bias, which is short in this case. Okay, and let's say price continues down to these levels right here where we get a 1 hour normal short strength, which further confirms this daily short bias, because although there was 5-minute strong long strength here, this is on the 1 hour chart. And you want to remember, the higher the time frame, the more strength it produces. Okay, and let's say price continues down to its main target. Okay, and again, hypothetically, let's say at this point right here, we actually had 1 hour strong long strength that was confirmed through trend lines. Now at that point, if I entered a short entry at this level, since there are higher degrees of strength in the opposing direction of the daily bias, which was short, I would abort this short entry right when that 1 hour strong long strength was confirmed, and thus moreover perhaps even change my view of this daily bias into long, and take a long entry with its main stop loss now at this level and its main target at this level. Okay, so those are the two underlying themes that you want to be looking for when you're confirming biases with the lower time frames. All right, now let's go on to how to draw trend lines for lower time frame confirmations. Okay, so how to draw trend lines for lower confirmation. Number one, the rules for drawing trend lines for lower confirmations are not the same as normal trend lines. Alright, so the rules to draw traditional legitimate trend lines explained in part 1 of this course are partially different from the rules to draw trend lines for lower confirmations. So let's go over the same rules first. Okay, so first of all, the trend lines must be attached from a wick to a wick, and moreover, the trend lines cannot be broken out or surpassed. Okay, so let's just go over these real quick. Okay, so for lower confirmations, the trend lines must be attached from a wick to a wick, or moreover, from this wick to this wick. And it cannot be attached from a wick to a body, or from a body to a wick. Okay, and moreover, they cannot be broken out nor surpassed. So let me just zoom out here. Alright, so first of all, a trend line cannot be broken out. So for example, if I do a trend line from this pivot to this pivot right here, as you can see at this point right here, this trend line has been broken out. And thus, even if price comes up to this trend line and breaks it out and breaks back in, that does not qualify for legitimate lower time frame confirmation because the trend line has already been broken out. Now, moreover, the trend line cannot be surpassed. Okay, so if we had a trend line from this pivot to this pivot right here, as you can see, this candle right here surpassed this trend line already. So let's say price hovers up and comes down, breaks it out, and immediately breaks back in. Now in this case again, this does not qualify for legitimate lower time frame confirmation because the trend line that it utilized was surpassed. Alright, and these rules are the same for legitimate trend lines, correct? But now let's go on to see how these new trend lines differ from the traditional trend line rules. Okay, so different rules. Number 1, it only requires 2 touches. Okay? Okay, so take this trend line from this wick of a candle to this wick of a candle. Now as you can see, there has been 3 touches on this trend line. However, for lower time frame confirmation trend lines, on this second touch right here, this trend line is already usable for a lower time frame confirmation. And that's the same for this upper trend line from this wick of a candle to this wick of a candle. All you need are 2 touches for a lower confirmation trend line to be legitimate. So let's say a price comes all the way up to these levels, breaks it out, and immediately breaks back in. This will show normal short strength. And that's the same for this bottom trend line. Since there's at least 2 touches, if price hovers down, breaks it out, and immediately breaks back in, this will show normal long strength. Okay, let's keep going. Okay, and trend line attachment points must be from relatively obvious pivots. Alright? Okay, so what I mean by relatively obvious pivots are points in price where price obviously changed direction. Right? So at this point, price obviously changed direction from down to up. Now moreover right here also, price obviously changed direction from up to down. And this part also. And moreover right here, or even right here, and here, and so on. Okay, so the trend lines must be attached to these type of obvious pivots. So for example, you do not want to attach a trend line from this wick to this wick because both of these are not obvious pivots, or moreover from this pivot to this pivot, because although this pivot right here is an obvious pivot, this pivot here is not an obvious pivot. Okay, so you always want to attach these trend lines to obvious pivots. Here, here, and here. Okay? Okay, and a trend line for lower confirmation must have sufficient consolidation between each pivot. Now, as a reference, there must be, give or take, a 15 through 20 pip candle range between each pivot. Now, however, sufficient consolidation is not necessary if the trend line is an obviously respected trend line. Alright, so what I mean by consolidation between the pivots is, say if I drew this trend line from this wick to this wick right here, with the pivots being at this point, and this point, the consolidation areas I'm referring to is the price action between each pivot, like so. Now in these areas, we want sufficient consolidation. Now as a frame of reference, that would be 15 to 20 candles, and in this case, there's obviously more than 15 to 20 candles. So let's go look at a different example. Alright, so let's say I drew a trend line from this pivot to this pivot. Now, as you can see, both pivots are obvious pivots. Now let's see how many candles are in this consolidation. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, and 16. Alright, so there is 15 through 20 candles in this consolidation, but again, that is a frame of reference. So even if there's only about 13 or perhaps even 11 candles, if all the other rules are intact, that trend line can be used for lower time frame confirmation. So you want to remember, if it looks like a chicken and acts like a chicken, it probably is a chicken. Now that's the mentality to have. Okay, and moreover, let's say current price came up right here at this point and came right back down and made an obvious pivot. Now if we drew a trend line from this obvious pivot to this new obvious pivot, now this would not qualify for lower time frame confirmation, for there is obviously not enough candles in between the two pivots. Now however, there is an exception to this rule, and that's if the trend line is an obviously respected trend line. So let's go ahead and look at an example of that. Okay, so on this trend line from this pivot to this pivot right here, now as you can see, there's not sufficient consolidation between these pivots. However, at the same time, this trend line is an obviously respected trend line, right? It has 1, 2, 3, and 4 touches on it. And so the exception is if the trend line is an obviously respected trend line, the consolidation between pivots rule can be bypassed. Okay, and as you watch my forecast and analysis, and I deal with these types of specific situations, I think you'll begin to get the grasp of defining how much consolidation is needed between each pivot. Okay, so let's go on to the next one. Okay, so the trend line test areas must be relatively equal in distance. However, again, if the trend line is an obviously respected trend line, equal distance is not necessary. Alright. Okay, so let's say we have this trend line from this wick of a candle to this wick of a candle. Now the distance between these two pivots is from this point to this point right here. Now the next time that price touches this trend line, either for a rejection or even a breakout and break back in, we want a relatively equal distance from this third test point to this second test point, which is this distance right here, as the previous distance from this pivot to this pivot. So let's say price came up around these areas and came and retested that trend line at this point right here. Now in this case, just by a tad, I would say the distances are not equal. And so you cannot use this test or break out and break back in as lower time frame confirmation. However, let's say hypothetically, price came up all around these levels right here and tested this trend line. Well, in that case, the distance between each pivot will be relatively equal and thus qualifies as a trend line for lower time frame confirmation. Okay, and lastly, if price came up straight up right here and made that new pivot right here, well, this distance right here against this previous distance is obviously not the same, and thus this test cannot be used for confirmation. Now again, there is a caveat to this rule, and that's if the trend line is obviously respected. So let's go back to that previous example. Alright, so as you can see here, this trend line from this pivot to this pivot is an obviously respected trend line. However, the distance between each pivot is obviously different. So typically, since the distance between each pivot is obviously different, we cannot use this trend line. However, since this trend line is an obviously respected pivot, this trend line can be used as a trend line for lower confirmation. Okay, and I think you guys could define your sense of whether or not a trend line is legitimate or not through watching my forecast and analysis, because I deal with these type of vague situations all the time in my forecasts. Okay, so now let's go on to defining a legitimate breakout. All right. Okay, so defining a legitimate breakout. Now at the basic level, the breakout and immediate breakback in scenario must have a sense of it being a fake breakout. Okay, let me explain this. So let's say we have an upward trend line. We have price coming around here. It broke it out and immediately broke back in. Now the sense of a fake breakout refers to the sense that as price was coming down toward this trend line and broke it out, there were buyers already waiting at this price level of the first breakout to immediately buy price back up and bring price back above this trend line. Now this sense of a fake breakout is something that you learn to identify upon using this lower confirmation method for a while. However, there are visual ways to confirm whether a breakout had the sense of a fake. Okay, so let's go over those. Okay, so a basic checklist to visually confirm whether the breakout had the sense of a fake breakout. Number 1, the breakout candle's close is relatively at the same price level as the open of the breakback in candle. Okay? Okay, so take this trend line right here from this wick of a candle to this wick of a candle and extend it out. Now, although there is not an equal distance between the pivots, because this is an obviously respected trend line with that fourth touch right here, this trend line can be used for a trend line confirmation. Now at this price level right here, there was a breakout and immediate break back in. So actually, let me just zoom in on this. Okay, that trend line was going right through this level right here. As you can see, there was a breakout and immediate break back in. So the close of the breakout candle and the open of the breakback in candle is at the same price level. Now this is one way that you can visually confirm whether a breakout had the sense of a fake breakout. Okay, so now let's go see an example of a breakout that did not have the sense of a fake breakout. Okay, so take this trend line from this wick of a candle to this wick of a candle. As you can see, we have sufficient consolidation between the pivots. Moreover, they are equal distance. Now at this point right here, there was a breakout to the downside, an immediate break back in. However, this did not have the sense of a fake breakout. So let's go ahead and zoom in on this. Okay, so here's that trend line right here. As you can see, when price broke out, it closed at this level right here. Then the break back in candle gapped down to this level right here, giving the sense that there was no abundance of buyers just waiting at this price level to buy it right back up, to bring it right back above this trend line. All right, so this breakout did not have the sense of a fake breakout. Now again, there is wiggle room to this rule, and so I recommend watching my forecast and analysis to develop the ability to know how much of a gap between the breakout and breakback in candle is legitimate. Okay, so let's go on to the next rule. Okay, number 2, the break-in candle must have over a 50% close relative to its high or low. Okay. Okay, so take this trend line from this pivot to this pivot right here. Now at this point right here, there was a breakout, an immediate break back in. And you can see how this break back ins candle has a full close and only a minimal wick on the top. So I would say that's about a 98% close relative to its high. Okay, so what we want on the break back ins candle is to at least have a 50% close relative to its high. So for example, if we had a trend line right here and price broke out of it and immediately broke back in. However, if the wick high is, let's say, at this level right here, well, that will only be about a 30% close relative to its high. Okay, so we always want 50% or more on the breakback ins candle close relative to its high. And again, this gives you a visual representation of a fake breakout for a close at this level right here with a minimal wick. Obviously shows that there were many buyers at that level. Okay, so now let's look at an example that does not qualify for a fake breakout. Okay, so this trend line from this wick of a candle to this wick of a candle. And at this point right here, there was a breakout, an immediate break back in at the same level. However, the close relative to its low was not more than 50%, right? So if we actually had a close right down to these levels right here, well, that would be more than 50% and will qualify for a legitimate breakout because it gives you the sense of a fake breakout where the sellers in this case were waiting right at this level to drive price right back to within this trend line. Okay, now finally, let's go over a demonstration of confirming biases with trend lines on a recent trade I was analyzing. Okay, so on this daily NZD USD chart, there was a bias that formed between this strong short trade right here and this weak long trade that formed right here. So the bias was short, or in other words, price was likely to reach this pivot low before reaching this pivot high. However, as price fell down to these levels right here, this daily short bias hit its target at a monthly gap level that runs right through these levels, changing the bias into long. Or in other words, price was now likely to reach this pivot high before reaching this pivot low. Now let me show you how I confirmed the initial short bias and moreover the bias change into long with lower time frame trend line confirmation. Okay, so let's go over to the 5-minute chart. Okay, so on this 5-minute chart, that daily bias was confirmed roughly in this area right here. And then as price pulled back all the way up to these levels right here, there was actually 5-minute trend line confirmation of strong short strength. Okay, so let's go ahead and zoom in on this. Okay, so that trend line confirmation was from this obvious pivot to this obvious pivot. And you can see between each pivot, there's more than a 15 to 20 candle range. So we covered that. And moreover, the distance between each pivot is roughly equal in length. And moreover, on this breakout right here, as it closed at this level right here, relatively, the open was at the same level. And moreover, there was more than a 50% close relative to its high. Okay, so at this point, there was normal 5-minute long strength confirmed. However, soon after that, price came right back down to stop out the pivot low where that normal long strength was confirmed, thus creating strong 5-minute short strength and thus confirming that daily short bias. Okay, moreover, let me just zoom out on this. Even as this strong short strength was confirmed here and price pulled back a little bit further, there were no signs of long strength that can override the strong short strength that was created here. And even as price started to go into the direction of that daily short bias, there were never any signs of short-term long strength that can override the short strength formed here. Now let's go ahead and look a little bit further. Okay, so again, as price fell down to these levels and moreover pulled back to these levels, there were still no signs of short-term long strength that can override that short strength formed here until we reach this level right here, where there was a strong 1-hour trend line long confirmation that overrided the 5-minute strong short strength that formed right here. And thus at this point, I acknowledge that that daily short bias did in fact hit its target and change this bias into long. So let me go ahead and show you that 1-hour trend line that confirmed this strong long strength. Okay, so that 1-hour trend line confirmation was on this trend line from this wick of a candle to this wick of a candle. Now these pivots are using obvious pivots. And moreover, there's a 15 to 20 candle range between the pivots. Now, although in this case, this first distance is slightly larger than this second distance right here, again, relatively speaking, the distance differential, although slight, did qualify for a legitimate trendline breakout. Okay, moreover, we got a break out of this trend line, an immediate break back in, and moreover, a more than 50% close relative to its low. And so at this point, normal 1-hour short strength was confirmed. However, as you can see, price pulled right back up and overrided that normal short strength right at this pivot high right here, and thus created strong 1-hour long strength, and thus confirming that the daily bias has changed from short into long. Okay, so let me just wrap this up on the daily chart. Okay, so again on this daily chart, that daily short bias was stating that price was likely to reach this pivot low before reaching this pivot high. And 5-minute strong short confirmation formed at this level right here, pushing price all the way down to these levels where a monthly gap level exists, which changed this daily bias into long. Or in other words, price was now likely to reach this pivot high before reaching this pivot low, and thus also changing the main stop loss level to this price level, while the main target level changed to this price level right here. And moreover, that 1-hour strong long confirmation formed right here, confirming this bias change into long, and price eventually hit its main target right at this level right here. Alright, so that's it for this lesson. In the next lesson, we'll go over confirming biases with the lower time frames using both price patterns and trendline breakouts. Okay, so like always, if you have any questions about this lesson, please leave it in the comment section. And I hope you guys have a great day. And thanks for watching, guys. Okay, bye.